Welcome to the latest Motley Fool scoreboard. I'm on in Chalk Balloon. We've got longtime fools, Toby Bordelon and Dan Kaplinger, giving a 1 to 10 rating to a big-time investment manager. It's BlackRock, ticker symbol BLK. Talk about the strength of BlackRock's business first, including industry and competition. A 10 is invincible. A 1 is hopeless. Toby, you're at a 9. Dan, you're also at a 9.
Yeah, I love BlackRock's sticky asset management business. They have done such an incredible job with the iShares line of exchange-traded funds. They attracted investors with relatively low expense ratios. So it's not necessarily as big of a profit center than other parts of the investment management business, but just that sheer amount of assets, BlackRock is able to wield that and has really been able to maintain leadership even in a competitive industry.
Yeah, similar thoughts from me here. This is the largest asset manager in the world. There's a reason for that. They're good at what they do. The iShares ETFs are very popular. You would think something like an ETF maybe has brand power, right? But I think it certainly seems to with them. It might be just because, look, they're the default for a lot of people in their 401ks and other employer plans and whatnot. But hey, credit to BlackRock for becoming that default for so many people.
Yeah, right. You say just the default. I'm like, well, that sounds like a moat, right?
Yeah.
For management, a 10 is Warren Buffett. A 1 is Homer Simpson. Toby's at a 9. Dan, you're at an 8.
Larry Fink's done a really good job capturing the ETF opportunity. I think that's just a masterstroke. The surprise for me is just how well that BlackRock's been able to defend its turf, both from companies trying to undercut on price and also for companies that are doing active ETFs. BlackRock has really been able to hold its own, and I'm really impressed the fact that it has been able to offer nearly identical ETFs, one catering towards institutions who are willing to pay more for liquidity, others for retail investors who want cheaper funds, not necessarily trying to trade them every day. That's just a really smart move that I think supports long-term investors well.
Yeah, I went even higher here, a 9. This is another business that you would not immediately think is founder-led. You think they've been around forever, something like J.P. Morgan or whatnot, as big as they are. But it's not. This is still a founder-led business. It's only about 40 years old. That growth is largely a testament, I think, to the vision of CEO and co-founder Larry Fink. One of the other co-founders, Robert Capito, is still actively involved as president, right? Management's very good at allocating capital here and steering this business through market turbulence from time to time to come out ahead of competitors. And it shows in how fast and how strong they have grown this business.
For financials, a 10 is a fortress. A 1 is yikes. Both of you have 8, Stan.
Yeah, Toby ran the numbers, and so he's going to get to that in a minute. But I just think from a big picture standpoint, the size of BlackRock's business, large enough to make that company systemically important. It's just a staple of investing. The fact that it has become so important, it produces a lot of revenue for BlackRock. And during bull markets, you get BlackRock not only gets more fees from those appreciated assets, but it also has new investors creating cash inflows into those funds. It's just kind of this nice flywheel effect that really helps drive the business forward.
Yeah, balance sheet is solid here. $10 billion in cash, another 13.7 in investments versus a little less than 13 billion of debt here. That's pretty good for a business like this. 13.5 trillion in assets under management and still growing. That's up 17% from Q3. And as Dan noted, that's not just because we had a bull market and the value went up, right? 200 billion of inflows in Q3. So they're still growing the client base, which is really nice. 25% revenue growth. The stock or BlackRock has been acquisitive, and that's hitting net income a bit in terms of their acquisition strategy, but that's something you maybe want to watch, execution, acquisition strategy, but really, really solid financials all around here.
All right, Toby, let's move on to valuation. How well will BlackRock stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
This is the one I'm less optimistic about. I think 5 to 10% on returns. Maybe at the higher end of that range for kind of a market matcher, maybe a slight market beater there. I'm a bit cautious just given their recent performance here. On safety, a 7. They do have a very diversified client base. The cash generation is strong. I don't think there's a ton of risk, But I certainly think you could see some fee pressure maybe in the short term. And if you get a market crash, maybe you see some people flight to safety, pulling some assets out. That's the only real risk I see.
Yeah, same view on the returns. I'd give a slightly higher safety score. I'm just not as worried about a market crash. Yeah, sure, the decline's going to hit fees because the base on those fees is based on market value. But overall, I feel like the assets for ETFs tend to be pretty sticky, especially among retail investors. Yeah, sure, that recurring fee revenue does take a minor hit, but the fact that it sticks around does offer some safety for shareholders in BlackRock.
Thank you to both Dan and to Toby. They've given BlackRock a strong overall score of 7.6 out of 10. Dan doesn't have a top it. Vanguard's in the space, but they're private, so kind of out of contention there. Toby prefers JP Morgan. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, full on.